Welcome back to the True Success Podcast. I'm Dan, joined by G2 Jake. We are the show built on one simple, undeniable formula. True success equals great lifestyle plus money multiplied by the time to enjoy it.
And as always, we figure it out so you don't have to. Great to be back, Dan.
Man, we have to jump right into it today, Jake. The financial world is in an absolute frenzy. If you haven't been living under a literal rock, you know the SpaceX IPO officially hit the tape. It is absolute unadulterated market electricity right now.
Oh, it's definitely historic, Dan. We are looking at the single largest IPO in global history. SpaceX dropped 555 million shares at 135 bucks a pop. That instantly implied a $1.77 trillion valuation, and the second it hit the secondary market, it cleared $2 trillion.
Think about that. 2 trillion rockets, Starlink, Elon Musk colonizing Mars. People are completely losing their minds trying to grab a piece of this thing. Citadel Securities actually reported that SpaceX's debut generated the single highest retail order activity for an IPO auction ever. I actually published a piece on investing.com last week breaking down the hidden traps of this exact mania. Because while the excitement is 100% understandable, chasing a hyped IPO without a framework is a fast track to destroying your wealth. To quote the great Taylor Swift, you need to calm down.
Yep, Dan. And that is exactly why we do this show. Because our listeners are high earners, successful business owners, and people grinding to build a legacy. And the last thing they need is to blow up a carefully built financial plan because of IPO FOMO. Dan, walk us through those blind spots because people really need a reality check here.
Let's pull back the curtain, Jake. And to be clear, this isn't about trashing SpaceX. The company is unbelievable. But the chaotic investing environment around a brand new mega cap IPO, that is a completely different animal. There are three structural tripwires every investor is blind to right now. Number one, analyst chaos. Wall Street forecasting models are completely unrefined right now. You are going to see erratic price targets and ratings over the next few months. That triggers massive artificial price swings. You aren't betting on Elon Musk, you're betting on a chaotic price discovery circus. Blind spot number two, no operational track record. Newly public companies have zero established reporting cadence. Some deliberately lowball their early numbers just to manufacture an artificial earnings beat. Others miss wildly and send the stock into a tailspin. That isn't data you can build a portfolio on, it's just noise. Number three, the lockup cliff. Everyone is celebrating that $75 billion raise, right? That represents only 4.3% of the actual company. The other 95.7% of the shares are currently locked up by insiders. The second that lockup period expires over the summer, a tidal wave of supply could flood the market.
Wow, Dan, great points there. Now, past performance does not dictate future results. However, what does the historical data say about all this?
Statistically, if you buy a stock at the actual IPO price, the average 3-year market adjusted return is negative 3.3%. But if you buy it after the retail pop, you are starting from a massive negative 20.5% disadvantage. The hype fade isn't a surprise. It is mathematically predictable. Look at the history books. Remember Blue Apron? It peaked at the IPO and bled out. Remember Groupon dropped 97% from its highs.
And even the masters of the universe get it wrong. Remember when Steven Schwartzman took the elite private equity giant Blackstone public in 2007? Investors were fighting tooth and nail to get it at $35. Then, less than 2 years later, it closed at only $3.97.
Ouch. It proves exactly why busy business owners and executives need a comprehensive financial plan to act as their anchor. Because when something shiny comes along, whether it's SpaceX, crypto, or the next hot tech trend, human emotion completely hijacks the brain. And emotion is the absolute enemy of wealth. So, what's the golden question we always get from our subscribers, Jake?
Well, they say, "Hey, Dan, Jake, I get the risks, but I want to have some skin in the game. Can I still invest in something exciting without putting my whole lifestyle at risk?" And we really love the answer to this one.
The answer is, of course, a resounding yes, but it comes with one strict, non negotiable condition. It has to live inside your Mad Money account. A little class X shout out to Jim Cramer right there.
Absolutely. This is the core framework. Visualize this blueprint. Your core portfolio, your retirement infrastructure, your tax sheltered allocations, your foundational wealth that is highly strategic. It has an explicit investment policy statement. It is built to fund your retirement, your kids' education, and your legacy. We do not touch it. We do not want to risk it.
But separately, you can play in your financial sandbox your Mad Money account. The rule that we have here is simple. It is strictly capped at 5 to 10% of your liquid net worth. If you've got 2.5 million invested in your core plan, sure, take 55,000, about 5%, and play the SpaceX game if it gets your blood pumping. That money is outside your main allocation.
And here's the beautiful part about that architecture. If that speculative bet goes completely to zero, and individual stocks and concentrated IPOs absolutely can, your life plan does not break. Your retirement timeline stays completely safe. Your kids still go to college. You still take the vacations. The baseline variables that define your true success formula are totally insulated.
Exactly. You get to have fun with money that was intentionally designed for fun. And look, this philosophy goes way beyond the SpaceX headlines. We talk to high earners every single day who have severe concentration risk, usually because a massive chunk of their net worth is tied up in their own business or the company stock where they work.
Which means if that specific industry takes a hit, they face a double whammy, a career setback paired with a collapsing net worth.
It's an unbearable downward spiral. Think of it like this: your diversified core portfolio is your heavy duty V8 engine. Your Mad Money account is just the turbo button. You get to feel the thrill. You might even hit a massive home run, but you don't need it to win for your life to work out beautifully.
Man, that is true success right there. You get the lifestyle, you get the capital, and most importantly, you get the time to enjoy it because you aren't staring at your phone at 2 a.m. panicking over an overnight earnings report.
Spot on, Jake. So, to the business owners, the corporate executives, and the hardworking families listening right now, if your current financial plan doesn't clearly specify what certain buckets of money are used for, it's time to upgrade your infrastructure. This is what comprehensive wealth management looks like: tax mitigation, structural asset protection, estate planning, and portfolio engineering, all moving in perfect synchronization.
We put the link to Dan's full investing article right in the show notes below. So make sure you check that out. And if you're ready to engineer your own true success roadmap or audit your current plan, reach out to us at WMGNA.
I'm Dan, and as always, joined by G2 Jake. Thanks for tuning in to episode 45. We figure it out so you don't have to. See you next week, everybody.